We all know that the banks are coming back into the market, and a lot of the banks never left the lending for seniors housing and care. And I have with me today Alec Blanc. He's a Senior Vice President and Group Manager for Regions Bank. He's based in St. Louis, and Regions has been in the business for quite a while. Alec, can you tell me a little bit about what Regions Bank is doing in seniors housing and care right now?
Sure, Steve. By and large, we're doing what everybody would expect: conventional bank term lending, do bridge to HUD, refi, acquisition. The thing I do want everybody to know is we're actually getting set to roll out a HUD lending business. We've recently hired an underwriter, a guy by the name of Ed Williams. We expect to have that up and running third quarter. We've taken applications hopefully early July.
Oh, great. Do you think you're going to grow that a lot, or?
Yeah, that's definitely an opportunity for growth. We see it as obviously a very valuable tool, both for us as well as for our clients. We have a lot of skilled nursing clients, and HUD has been the primary permanent financing vehicle for those clients, and so we wanted that as a tool in our war chest for them.
As the economy has been improving, and more particularly the senior care and senior housing market improving, have you seen more loan requests coming in?
Yeah, volume has gone up. I think the industry sort of hit a pause button, particularly on the skilled nursing side in the fourth quarter of last year. But as we've seen the impact of the cuts filter through into the financial statements this quarter, and I think even more so next quarter, the activity level has kind of returned.
That's good. Okay. And do you have any target number for loan volume in this space for 2012?
Well, last year we did about $200 million in new loan originations. We've done just shy of 50 so far this quarter, so we're about on pace with last year. But the pipeline is strong. It's over $200 million currently, so I think we can do three this year.
Probably break that. Oh, that's good. And what about loan size? Do you have a sweet spot in terms of what kind of size loan you like to do?
We do, Steve. We'll do $5 million to $50 million, but generally we like to be kind of in that 10, 15-ish up to 25 is sort of the sweet spot for us.
Okay. How about geographic preference?
We are a regional bank. We prefer to stay in footprint, which for us means either the headquarters of the operator should be in footprint or the facility should be in the footprint, preferably both, obviously, but either one will work. Our footprint runs from Florida to Virginia to Iowa to Texas, covers 16 states.
Nothing out west or northeast?
That's correct.
Any plans for that?
I'd love to be able to tell you that, Steve, but I'd have to kill you.
The seniors housing side of the business and assisted living really had a very strong market last year. Do you think you're going to want to get more into that, or stay more heavily with skilled nursing?
I'd like to see us do a little more on the assisted living side, Steve. We've been fairly heavy in the skilled nursing. I don't expect us to be on the independent living or the CCRC side of the business in any meaningful way. We are really healthcare lenders at the core, and so we prefer to lend into properties where hardcore healthcare is being provided. We believe that's skilled nursing and assisted living.
Yeah, because I wonder, do you think assisted living, some people call assisted living the skilled nursing of 35 years ago, and with so many services and home health and hospice coming into assisted living, do you think you might start looking at that as a very heavy healthcare business?
Yes, definitely.
Okay. And people are talking about new development coming on.
Yeah.
And not many people are scared about that. But you're a balance sheet lender, and you say you're getting into the HUD. That's not a big part of your business now, but do you see yourself maybe getting into that?
We have not done a lot of construction lending, Steve. We're cash flow lenders at our core, and at the base, a construction project is a startup, so that gives us some pause. We did 2 construction loans last year. In both cases, they were for existing clients with fairly healthy portfolios, meaning sizable portfolios that had plenty of cash flow that we could rely on if something went wrong with the new property. We feel good about those loans. Those projects are tracking. I think maybe we'll do a couple more this year, but I don't expect that to be a big portion of our business this year.
Okay. And the whole market has been kind of heating up. I mean, the assisted living, independent living side, we saw values go up by about, on the sales side, about 50%. Cap rates didn't decline too much, but they did decline. Skilled nursing was still relatively strong despite the uncertainty with Medicare. Is there any worry that, especially with the returns that people can get with skilled nursing relative to other real estate, that any concern of an overheating market at the bank?
Not at this point. I think we're still pretty early in the cycle. As you said, particularly the lighter levels of care, the assisted living, independent living, did start to heat up a little bit last year. The pause that we took in the fourth quarter on skilled nursing, I think, probably dialed values back a little bit, and buyers will come back to the market over the course of the year, but not, in my belief, not at a level that is going to really overvalue those properties, if you will.
Right. Okay. Well, good luck with the portfolio, and I hope you can. That'd be nice if you hit $300 million. A nice 50% increase would be great for you guys.
Be terrific. Thanks, Steve.
Thanks.